Hi everyone, my name's Daryl Payne, CEO of As Good as Gold Australia. And this morning, once again, I'm joined by my brother Brian.
Thank you, Daryl.
Partner at As Good as Gold. And before we introduce our very special guest, Brian, what I would like to do is confirm that As Good as Gold Australia opened their office in Melbourne going back on the 14th of November. We had about 80 people in attendance, didn't we?
It's chock-a-block room.
Fantastic night. I mean, it was just full of fantastic vibes. Everyone was on the same page. Just a terrific event. And business since then, of course, has been terrific. We've been really well supported by our clients and a lot of new people coming in, which we were anticipating. That's what it's all about. But just to give you the address, so everyone knows where to go, we are at 257 Collins Street. We're on level 3, the Emirates building. And if you'd like to make contact with us, make a call for an appointment, our 1300 number, 1300 295833. So plenty of stock on hand. A lot of people running out of stock, but not us. No. We have plenty of stock, and we are promoting this product, our Freedom Coin, which has in silver and in gold, they're 1 ounce coins. We have just had a phenomenal response to both these products. So they're just racing out the door as quickly as we can produce them, aren't they, Brian?
Yeah, well, we can't keep up with the gold ones. That's, because they're the latest ones. They've only been out for 2 or 3 months, where the silver's been out for about 6. So, we run out and we get them back in real fast, but yeah, they're moving very quickly.
Pumping them out, so we need to increase. Lynette, the company that is minting these for us at the moment, thought they had a pretty good system, but they've also got to bring in another press or have one that operates a lot quicker. Produce higher production. So it's been a great response. Okay, now what I'd like to do is introduce our very special guest, of course. None other than the Chief Marketing Analyst at ITM Trading, right over there in Phoenix, Arizona. I speak of the incomparable Lynette Zang. Good morning, Lynette.
Good morning, Lynette.
It's very nice of you. And yeah, I'm not really surprised that gold and silver are flying out the door. We are seeing a lot more demand, physical, and maybe I shouldn't ask you this question, but what are the premiums doing? Because we can see the spot market still being under pressure because that's a contract. But we've noticed here that there's been a decoupling between that spot gold and silver markets and the physical metals.
Yeah, like we've noticed that in the United States.
In the United States, we have
not so much here. So I'm not quite sure what the reasoning is behind that. We've asked the question many times, but you'd be paying a lot more for the product over there with the higher premiums than we have here. So I don't know, but.
I've been even asking the question myself. Maybe we should ask the guests that we have in the United States. But what I see from the retailers in the United States, that an American Eagle silver coin anywhere between $38 and $40, and that's about the same price it is in Australia. Yet the exchange rate over here is around about 0.65 or 0.68.
6.8.
But no, you're paying a higher premium in the United States. So there is something about that I don't understand.
Good, because it's a true supply-demand market, but your spot is also higher than our spot because I think we probably suppress it more.
Oh, look, I would say so. What was I thinking of? I think you're right. I think your tendency to have a fairer price on the silver simply because it's the spot price is ridiculous. You know, the latest report was that we're into a deficit of something like 200 million ounces compared to what we dig out of the ground. I mean, how can you supply it? You know, at a less than what we're digging out of the ground. That's beyond me.
Exactly.
It's bad news every day in Australia at the moment. And I don't want to spend too much time on that. I'd rather talk about positive news. But once again, the RBA has made a decision here in Australia to continue to increase interest rates. They've gone up another 1/4. Cash rate now 3.1%. Most importantly, it's impacted on mortgages to a considerable degree. A $700,000 mortgage now, increase in payments somewhere around $1,150 a month. I was only thinking, and there is the suggestion is from the RBA that this will continue. There is no thought in mind at the moment of halting or reversing. So if it was to continue to the same degree for the next 6 or 7 months at a 1/4 a month, you'd be looking at a $700,000 mortgage at around an extra $2,000 a month. So not a lot to look forward to for Aussie homeowners. But that's the negative stuff. What I wanted to do was talk about something really positive. And surprise, surprise, I want to talk about gold, Lynette. And so, and look, and it's all about a comment or a number of comments that were made by a very influential banker of late. And good, sound, positive comments rarely come, well, in reference to gold, really come from banking, for the banking fraternity. So, that's true. Yeah. So, but before I do that, I just want to share a quick story, if I can, and I think our viewers will appreciate this as well. Brian, most of our viewers know that we have a lifetime mentor and gentleman by the name of Peter Daniels. I visited Peter going back about a year ago at his home just outside of Adelaide. And Lynette, he has this, in his office, he has a painting with 7 men and himself seated in his nice lay-back office chair. And he's just looking at these 7 men. When I walked in the office, I knew the painting was there, but I said, Peter, what's the relevance of that painting? And he said, it's like this. He said, those 7 men are the most powerful men, the 7 most powerful men in my life. So he said, I've learnt a great deal from them. He said, I know 6 of them intimately. One of them I never got to meet, but I've read his biography and his autobiography, and that was Sir Winston Churchill. And we all know of Sir Winston Churchill's fame. So he said, and I could mention the other 6 men. One of them was Dr. Norman Vincent Peale, who wrote the book, The Power of Positive Thinking. Probably the most powerful self-help book of all time. Dr. Robert Schuller, famous, of course, from the Crystal Cathedral. Dr. John Haggai Institute. Dr. Billy Graham, Martin Luther King Jr., great evangelists. W. Clement Stone, who was the author, once again, of positive thinking books, and a great businessman. And of course, I've mentioned Sir Winston Churchill. So 7 powerful men. And Peter would say, I know these people. I know how they think. I know what they do. I know how they react to every situation. So when I have a challenge that I'm confronted with, I just sit down and I look at the painting and I think to myself, how would these 7 men handle this challenge right now? Now, I draw a conclusion, and he said, I have never had a challenge in my life that has been that overpowering that I could not handle, working on that basis. And when you think about that, how powerful is that?
How powerful is that?
Wow.
Yeah. That's very powerful.
Yeah, huge. And so here we go. We can learn from people. Sometimes we learn good things, sometimes we learn bad things, but we learn from all of that. But when somebody of Peter Zollner's ilk, from the Bank for International Settlements, he is their head banker, passes comments, lots of them, positive comments about gold, you've really got to sit up and listen, because what basically we believe that bankers talk quite negatively about gold. It's an archaic relic, right? It has no real value in the marketplace. But here's a man leading the charge, and he talks seriously positively about gold. And I want to share these thoughts with you. And what I'd like, Lynette, if we could, is have your feedback on his comments about gold.
Absolutely.
So it's Peter Zollner, head of the banking department of the Bank for International Settlements. He spoke at the Global Precious Metals Conference of the London Bullion Market Association. This was held in Lisbon, Portugal. And of course, the BIS is not just a bank, it is the bank of central banks. And so here's what he had to say about gold. Point one, he said, gold is durable and largely imperishable and nobody's liability if you hold it physically in your vaults, which frees it from default or counterparty risk. Lynette, could you just expand on that a little bit for our viewers?
Well, absolutely. A lot of people don't understand what counterparty risk is, but it's really simple. If you and I make an agreement, if you don't hold up your end or I don't hold up my end, then that's counterparty risk. Whereas with gold, there is no counterparty risk because you hold it and own it. It's not a contract. It's a tangible asset that also has the broadest base of buyer. So I believe that's what they're talking about when he's saying that, because counterparty, everything else is counterparty risk.
Yeah.
Currencies are all based on the full faith and credit of the government. That's a counterparty risk. What about, well, we see what just happened with FTX, right? And the cryptocurrency debacle that's still continuing to play out, and it's like dominoes falling. But you don't have that with gold. You don't have that at all with gold because you hold it, it's in my possession, and it's in, for all intents and purposes, even though you can see it right here, it disappears.
Yeah. What did JP Morgan say?
No.
He said gold is money, everything else is credit. Yeah.
Exactly.
Yeah. I mean, once again,
Great point.
Coming from a banker.
Coming from a banker. I mean, what I find intriguing here is that central banks understand the value of holding gold. They all own gold. And yet nobody's talking about it for us. I mean,
Correct.
Why wouldn't we want the benefits that central banks expect from gold? And we can have them.
Totally. And we've just seen that central banks have bought more gold this third quarter alone in 2022 than they ever have in history. Gee, why?
Yeah. Yeah. Yeah.
They have a lot of papers they need to put these relics on, or what?
Yeah. I'd have to say, just about everybody, Darryl. I do recall the Canadian Prime Minister or country selling all their gold, and then the dictator came out and stopped the protests a couple of years ago. And so that just goes to show that if you counterparty risk, I think I'd rather have gold in Canada than rather look at the word of the Prime Minister.
100%. I hope everybody learned from what we saw them do, that because that's what's going to happen to everybody if all of your wealth is held inside of the system.
Yeah.
They say they don't like what you think. They don't like what you do. Boom.
Yep.
Yeah.
They come back at you. Next one.
Here's the next point. Unlike currencies and debt instruments, which are claims on foreign governments or institutions, gold kept in your vaults isn't subject to political manipulation or monetary and fiscal policies.
Exactly. Whether it's so a vault can be a vault that you own, or I own my own vault. And again, gold held at home runs no political risk because they can't see it, right? Even though it's real and it's tangible, once it's out of the system, it is invisible to them. And what the central banks are really attempting to do with CBDCs is make absolutely everything you do visible and controllable by them. But this isn't. And that's why they're accumulating it, because they want to stay in power, but they're not going to tell you about it. They're going to do what they can by pushing down the price so that you think, oh, well, gold isn't really, even though it really did outperform pretty much everything last year. But still, why would you want it? No, you don't want it. So, but yeah, gold held at home. It's invisible to them. They can't control it. They can only control through perception management how you think about it. But once you know the truth, they've lost you, like they've lost me. They can say anything you want. I know the truth, and I hold it in my vault.
Yeah. Yeah.
Very powerful.
Oh, it is.
Very powerful.
I mean, point 3. Gold has been proven to serve as an inflation hedge, although only over the long run. I would think that's what you would want it to be, over the long run. I mean, an inflation hedge over the short term, I mean, I don't see that's being a huge asset. But inflation hedge over the long run, how powerful is that? Lynette, your comment.
Well, that's absolutely true. And I think the reason why he probably said over the long run is, again, because the spot market is a contract, right? So they can create a whole bunch of gold that does not nor ever will exist. So in the short term, anything is possible, right? They can create, I mean, didn't you say, weren't we talking about a deficit in the physical market earlier? Well, if the spot markets, whether they're gold or silver, actually reflected the true deficit for gold or silver, the prices, if it was a true free market, would be a lot higher. So, and again, a rising gold price is an indication of a failing currency. Governments and central banks do not want you or I to know that the currency is failing. And the other piece that I would like to kind of throw in here, and that is, we all work. I mean, the reason why we have money to begin with is so that a society can specialize, and you have a farmer, you have a baker, you have a lawyer, etc. And so they needed a tool to make sure that you're always fairly paid for your labor. And that's why gold became the primary currency metal, because it's the only one that actually does it. So you have your gold and you're trading your labor for somebody else's labor, which is a fair exchange. But no matter when you use it, you will always be fairly paid for your labor, although not with the spot market. And by the way, the CBDCs recently, I don't know when they changed this, but I could tell you I was very troubled when I saw it. I was preparing for some event, and I went in and looked at the functions of gold and at the Treasury, because I wanted to, capture that image. And they removed the short-term store of value, because dollars, government money through inflation robs you of that. So it forces you to take risk so that you can maintain what you already worked for.
Yeah. Got it.
Have we ever known any government to do the best for the public? It's usually the best for themselves.
Exactly.
Point 4. I can believe it, but it's powerful stuff. Most importantly, it is widely recognized for its potential value in highly adverse scenarios. Wow. This is as if we don't have one right now. This is the so-called war chest value or tail risk hedging value of gold, which is difficult to capture in standard quantitative analyses. I mean, you couldn't tell the story any better, could you?
No, not at all. It's right on the mark.
He's telling us to buy this stuff right now.
Yes, he is, because the Okay, a yield curve inversion, a global yield curve inversion just occurred. Do you know that that has never happened since they began tracking the global yield curve? So this is a first time in history, and what that's telling us is that something extraordinarily nasty this way comes. And look at all the warnings we're getting about forced selling and market drops and corporate earnings and inflation and blah, blah, blah. It's because we're shifting systems. But this has proven to go through all of those calamities.
Correct. Yes.
Right? It's a key component of dynastic wealth, which is wealth that lasts in families at least 300 years. So yes, exactly. And we are in for it huge in 2023.
Yeah, it's interesting, isn't it? I mean, like when people talk to me about cryptos, and I'm not positive or negative when it comes to cryptocurrencies, but I just say I don't have a good enough understanding of them, and that's probably because they have no history. For example, how well did Bitcoin function during World War I and II? How well did Bitcoin perform during the Great Depression? How well did it perform during the fall of the Roman Empire? It didn't, because it wasn't there. Gold has performed favorably on all of those occasions. It has, as mentioned, 5,000 years of monetary history. It never fails. I mean, this should be on the lips of every news reporter on the mainstream media. I mean, you've got to be kidding me. I mean, there's going to come a time where everyone says, why did you not tell me?
Yeah. Like saying those figures, Darryl, and we're talking about past history, past wars and whatever. Right now, I know we have a bit of a confrontation in the Ukraine. Well, if I have a look at the price of Bitcoin, it hasn't gone up. It's gone down. So I don't think it's in war times, it's not going to be much good at all. Not from the history of the war in Ukraine, Interesting.
Well, it is very interesting. And let's kind of put another interesting layer on it, because honestly, like you, Darryl, I don't have a positive or a negative. I mean, I do know that we're going into some form of cryptocurrencies and probably the CBDCs. But what if all of these cryptocurrencies were created to get the population comfortable enough to adopt a CBDC? What if it was never really intended to be a long-term piece, just a short-term piece, which if introduced by the government would probably have people going, no. But if it's introduced by a private entity, people go, got a lot of visibility, still gets a lot of visibility, whether it's positive or negative, it gets a lot of visibility. It gets a lot of eyes. And I can't speak for Australia, but a recent report that I read said that 16% of the US population has bought and sold cryptocurrencies, right? That's more than on gold by a wide margin. So they do have adoption. And what if what's happening is about showing private cryptocurrencies bad, government central bank cryptocurrencies good, because there are reports that are coming out that are doing just that from the IMF and I think even the BIS. Right? Just suppose. But either way, they are intangible. And the truth is whether it's fiat money or cryptocurrencies, they have use in one area. And it's all become a big trade. Whereas you look at gold and it's used in every single sector of the global economy. So 100% of the time there is demand, maybe more, maybe less, but it doesn't go to zero because there's always the broadest base of buyer. And when you're talking about the Bank for International Settlements, when you're going into a fight, what do you want? You want one little wimpy tool that boop can evaporate like that? Or do you want an arsenal? This is an arsenal in a teeny weeny package.
Yeah.
Yeah, absolutely.
Yeah. No, absolutely. And I can't, at my age, I can't afford to risk anything. It's a little bit like Egon von Grey's comments. How much you invest in precious metals, whatever you can't afford to lose. If you've got $500,000 and you can afford to lose 100,000, well, you put 400,000 into gold. But I'm like Egon. I don't want to lose anything. And so I'll throw everything into precious metals. And I've done that now for 30 years.
Too.
Yeah. And it's placed Brian and myself in a very, very, very sound position. So question 5. We better get to question 5, otherwise Brian won't have an opportunity to ask you any questions at all. But it just goes to show how you can engulf yourself in the subject.
Absolutely.
Oh yeah, we could do a whole show just on this.
Of course. Finally, gold should not be seen, and this is from the man, gold should not be seen as a dormant asset in a vault for the rainy days. Gold is an asset which offers opportunities in the financial markets. It can be used to create liquidity or as collateral, often more cheaply than using other assets. Your comments there, Lynette.
Well, it is a tier 1 asset, so it's the safest thing that you can do. And how many people talk to you about when the stock market is going down, that the spot gold market goes down too, right? And why is that? Because if you have borrowed to buy those stocks and they are going down, you're going to get a call from your stockbroker. We need you to deposit more money. So maybe you have to sell something off. And it's not whether or not this is what I want to sell. It's what will the market buy, right? So yes, again, it goes back to the fact that it's used globally in every single sector. It's the most liquid asset that there is because it runs no counterparty risk, right? And it has the broadest base of buyer. So yes, and I actually, I was able to use my gold really as collateral for a short-term loan. So sometimes that's hard to do, but banks would rather have this than, call them up and say, hey, I've got some shares in FTX. Let's see if they'll take a loan against that. Thinking that.
Now everything that we've been talking about this morning has come from the biggest banker in the world, in real Peter Zollner. Now, you'd have to suggest that this man has a private stash as well. It's not just the bank investing in gold. When someone speaks as positively about this metal as he does, he's got plenty of it as well. Let's don't forget, let's don't forget what Peter Daniels said. And Peter Daniels, by the way, is a billionaire with a B. So his approach to life and learning and understanding what somebody says, the information they provide, and taking advantage of it has got him into that position. So we've got to learn from this today. We really do. Next question, Lynette. Away from Peter Zollner for a moment, but I'd like to highlight a couple of points. And then Brian gets a chance to ask a question. Can you believe it?
Will I?
I just thought you were there for me.
Yeah, look, sometimes I just come along for the ride, Lynette. Yep.
Thank heaven we get along remarkably well together. Okay, so currently, Lynette, Russia, Turkey. I've written these down because there's a lot of them. Russia, Turkey, India, Poland, China, Kazakhstan, Hungary, Thailand, Japan, Brazil, the Czech Republic, Turkey. They're all buying gold.
Yes.
We have half of the world's central banks buying gold, and we know why. Peter Zollner has told us why. They're buying massive quantities of gold and taking delivery at a faster rate than any other time in any of our lifetimes, and no one is talking about it, right?
Oh.
Now, if mainstream media if mainstream media news channels were genuinely interested and committed to providing good, sound, powerful economic information, gold would be at the top of the list. It would be the major talking point all around the world right now. But Lynette, because they are not, we can't give them time. I don't know whether they'll ever do this, but Lynette, because they're not, how about you giving us your reasons as to why, and we've touched on this a bit anyway, but why the central banks of the world are all buying gold?
That's actually pretty simple. And that is because they want to stay in power.
Yes.
So whoever owns the gold remains in power.
Yeah.
And, I think the advanced economies have gotten pretty cocky, right? I mean, you mentioned it earlier, Bank of Canada, they don't own any gold anymore. I would not want to be Canadian, and my son-in-law is Canadian, but I would not want to be a Canadian citizen because they have no protection. So it really is simple. It's whoever holds the gold, you're actually holding real wealth that's completely marketable. And you did see what's happening in Ghana, right? In Ghana. So, I mean, they're accumulating gold because nobody wants their currency. So what are you going to do as an individual when nobody wants the currency? You better have barterability and real wealth, because the other part of that are the opportunities that always present in crisis. But you have to be in the right place at the right time with the right asset. If you've got something that nobody wants, you have nothing.
Yeah. And I know right now that gold, silver can be used as money right now. This has been a test program for me. 5 years ago, I approached 25 small owner-operator suppliers, presented my case to them, and I pay for my meat, I pay for groceries, I pay for coffees. Brian and I go out and have a coffee. It's a couple of 1/10 ounce silver coins. The deal's done. And I've got 25 suppliers like that now. And I set that up, Lynette, when not a lot of people were talking about gold. Can you imagine what's going to happen in the next year, 2, 3, 4, 5, as gold and silver become more prevalent and the economy really starts to self-destruct? Small owner-operator businesses are going to be desperate to access gold and silver. So absolutely. It's money. It's serious money. And I just looking forward, if the banks start reducing or restricting the amount of currency that we can extract from our accounts, hey, gold and silver are going to stand up very, very well.
Absolutely. And, there are so many different ways that they can do this restriction as well. But once we are in full digital form, I mean, the central banks are talking about being able to tweak the money constantly. Oh, yeah, I'm real comfortable with that one. I mean, are you kidding me? And they want to remove all of the functions of money and take it down to 2, which is just a tool of barter and a tool of measure. Forget any level of holding value, because they want to take us into a negative. Look, they've inflated all the purchasing power value of the currency away. They have to attack principle. That's what negative rates are about. And they keep talking about no limitations on how deeply. So now you get paid, and as soon as you deposited it to the bank, it's less than when you got your check or the deposit because you won't get a check. It'll go directly in. You tell me why that's okay with me. I'm not even going to be able to get paid fairly for my labor, and I wasn't getting paid fairly to begin with because of inflation.
Correct. Yes. Yes. Like putty in the palm of their hands. And I've often said, like Oliver Twist, and most people remember that that part of the presentation in the movie where Oliver Twist walks up to the master of the house and says, "Please, sir, may I have another bowl of soup?" And the master just utters one word. He says, "More?" As if to say, who on earth do you think you are asking for more? That's where we're heading. So if you don't have an alternative, you are going to be in serious trouble. Brian, the floor is yours.
Wow. Well, I hope my couple of questions that can be construed as a little bit more positive. Darryl and I are different people in some respects. We are brothers, but I have and this question is not about central bank digital currencies. In fact, Alistair McLeod, who we interviewed quite a bit, says he can't believe that it's going to happen. And he gives a good point, and that is that the banking community, the private banks in the United States, have been they've been using obviously fiat currency for such a long time that made them very powerful. If Washington takes over with digital currencies, what part does the private banks of the United States actually get involved? It goes back to Washington. So in Alistair's opinion, it's not going to happen in the United States, but that's one point of view.
I hope that he's right. I'm telling you, I hope that he's right. I know that they want it. I am working against it. I mean, so are you.
Yeah, absolutely.
Right. So I hope he's right. And I have a lot of respect for him.
Yeah. So the two questions, one's a bit more of a statement, but I'm going to read out for you because I've always believed, and I do a lot of reading. You made a comment there about having money paid into your account and it's worth less than before you can get to spend it. That seems to remind me of a year of 1923 in Germany, where they were printing like crazy and they were being paid two times a day. In actual fact, it got that bad.
It did.
Anyway, I've had the long-term view, Lynette, that the period of 2022 right now, 20 to 2025, there will be a consistent increase in the amount of talk about gold backing of currencies. Now, right now we have Russia and a couple of others. Darryl mentioned the fact that the central banks. And after that, perhaps between 2025, 2027, which is not very far away, the implementation of a gold standard. Now, they have been my thoughts, but I want your thoughts about those in that period. Do you disagree? Do you think I'm too far out or not far out enough? What do you think?
First of all, I'll say timing is the biggest challenge of any technician, okay? Because we can tell you what is most likely to happen, but exactly when it can be a little bit of a challenge, except I think your timing is probably pretty good because we have those interest rate benchmark transitions that are supposed to take place by June 30th of 2023. And I think that there is probably going to be some kind of major crisis before that because I don't think they can make the transition at all. And so they're going to have to cover up that blunder. And consequently, I do also think that central banks are going to come out and use the only tool at this point that they have, which is just to print that. But the confidence of the public, which is the only thing that's holding this game together. I think the confidence of the public is really low right now, and that will be it. Once they do that, and the public sees even more rapid inflation, that's going to be it. So I think your timing is probably pretty good because they have to work off and get rid of these massive amounts of unpayable debt. And so they do that to create hyperinflation that would then repay that debt with currencies that no value, right?
Yeah.
It'll take a while to work through that debt. And then when you're talking about gold, history has proven over and over and over and over again that there has to be, once all confidence is lost, there has to be a component of gold that's put into the currency so that people start to trust it again and use it. So
Yes,
timing
that's right.
could be, we have a lot to burn off. I think your timing's probably pretty good.
Yeah. Well, I think it's pretty good, but it's still not. We don't have a long time in front of us to start to buy gold and silver. I mean, you start. The most important thing is that you buy it as cheap as possible, and that is today, because it's going to rise.
Most important thing
very
is
heavily.
to start. I believe once one starts, they keep adding to their position.
Absolutely.
Yeah.
I mean, I think the most important thing is to hold it and own it.
Yeah.
And do it as quickly as you can, because people always think that all these options will be available whenever they are ready, and that's just not the way it works. We get a big black swan event. I mean, look what happened in 2020, right? And people rushed into gold and silver, and a lot of the products that were available prior to that are still not available today.
Yep.
And the premiums were ginormous.
Yeah, exactly. I do remember that the Perth Mint were up to 16 weeks delivery on some items, and no delivery on certain items. And that's only. I think we may have had a slight increase in the amount of people that were buying silver and gold. So let alone everybody buying silver and gold to cover themselves. Next question. And before I do, I'm just going to read a couple of statements. One's from Egon von Grass, who we all very well know. But he said today, I read an article today, the US debt has gone up 35 times since 1981. But the tax revenue has only increased 8 times, from 0.6 trillion to 4.9 trillion. How can any sane person believe that with debt going up at 4 times faster than the tax revenue, that the debt can ever be repaid? I mean, what a statement. It's so obvious to the person who actually reads.
Thinks.
Can I add a little bit? Because I love Egon. And I'm going to add one little thing. And that was a study that I did, I think, back in 2009. Because I said to myself, wow, if you look at the deficits, I think at that point we were about maybe $1 trillion in debt, running deficits, something like that. So that was after 2008, which was a pretty big deal. And I said to myself, wow, if we're only running $1 trillion in deficits, which would mean that the tax revenues were enough to pay it, why at that point we were 13 trillion in debt? So when you dig into the numbers, what you find is the difference is the interest on that debt. And so if you are not paying all your interest and let alone your principal, well, then what are you doing? But you're compounding interest.
Yeah.
So I think now they've got to raise the debt ceiling and we're over 31 trillion, right? And we were at 13 trillion. I believe I did that in 2009, maybe it was 2010, but it was after the financial crisis.
Yeah.
So he's 100% right. This debt is not payable. It's never been payable. And you also have to understand, because we are in a debt system, that is about constantly compounding debt, because if you pay it off, you pull money out of the system.
That's it. Yeah. So
Correct.
Houston, we have a problem.
Houston, we have a problem.
There's a magazine that I bought a couple of years ago, and it's all about US presidents. And I find it so intriguing because I do recall here the United States have had 2 presidents that have been excellent on not going into debt. But there's only one that has reduced the debt. And his name was Andrew Jackson. Andrew Jackson was the president between 1829 and 1837, and he reduced the debt of the United States from 58 million Now, you're talking about 1829, 58 million debt to $337,000. Pocket change. Yeah, pocket change. But interesting enough, he was also, in his time there, he sacked the Central Bank of the United States. This was the second Central Bank of the United States. He got rid of him, right? And that's why he was so clever in getting America back on the back to a fully gold standard. But anyway, upon my reading of the last few days, Walter Bloomberg through Reuters mentioned that the BIS, here we go again with the BIS, the BIS warned that pension funds and other non-bank financial firms now have $80 trillion of hidden off-balance sheet debt in the form of FX swaps. That's foreign exchange swaps. Now, we talk
the derivatives.
18 trillion derivatives off balance sheet. Now, Bill Holter, who we just last spoke to, he came up with the figures. I asked him, what would happen if we come back to a gold standard? He said, recently interviewed, we also, under a true gold standard, that gold would have to be revalued at somewhere between 125,000 to 800,000 US an ounce because of the unfunded liabilities of which the US has 175 trillion of, and that comes from the US debt clock. By the way, the world GDP is about 300 trillion. So, Houston, we have a problem. Lynette, your thoughts about how important it is to own gold and silver in physical form?
Well, let me tell you, that's where all my money goes. Okay. So I therefore, and I do sleep really well at night because I know that my family is protected no matter what happens. And I'll just say one other little thing about the derivatives. If they're talking about 80 trillion or 120 trillion or whatever number they're talking about, you need to understand that that is nominal, which means that these derivatives, the foreign exchange swaps, are just one form, but there's a gazillion of them. They're all about leverage. And what the BIS admits, the IMF admits, the Federal Reserve, all the central banks admit, they all admit that no one really knows the true amount that is at risk because they use all of these funny accounting tricks to make things look one way when in reality, that's what's going to bring the whole system down. So what do I want? Do I want intangibles that can VOOP? And who are you going to complain? Stock market drops 20,000 points. Who are you going to complain to, right? There's nobody that you can talk to. But this in my possession with complete demand globally in every single sector of the market. Oh yeah, that's very important. Runs no counterparty risk, runs no political risk, protects me from inflation. And guess what? Governments, central banks, disappeared. Can't see it, gone.
What else do you need? Exactly.
Well, you need food, water, energy security, barterability, which is silver, wealth preservation, which is gold, community, which is what we're doing, and shelter. Those are the things that you need to really sustain a reasonable standard of living.
Yeah, no, spot on.
I agree, 100%. Lynette, thank you so much. Thank you so much for your input today. I mean, fantastic as always. But before we go, I'd like to ask you a little bit about ITM trading. Can you tell us a little bit about ITM trading? And in fact, if any of our viewers, and we have many of them, are interested in connecting with you, how would they do that? If you could provide us with those details.
Oh, be happy to. ITM trading, as you said, it's located in Phoenix, Arizona. So we work in different parts of the world, but everything we do is with the physical metal itself. And
Love
I
it.
personally have been studying. Yeah. So hold it, own it. If you don't hold it, you don't own it. I don't care what your perception is.
Yep.
But also we execute a strategy that's based upon the studies that I've done since 1987 on currency life cycles. And I find it really interesting because I do meet a lot of people, very smart people. And it's still hard because of that normalcy bias to imagine that this currency that we're used to could actually go away when it has many times. So the strategy is just based on repeatable patterns. It's actually not rocket science. But if something's happened over 4,800 times, 100% of the time, and we're doing the same thing, I'm guessing we're going to get the same kind of result. That's the best shot. I don't think this time is different. So you can find us on itmtrading.com. We love phone calls if you're in the US, 888-696-4653. And we have a very busy and active YouTube channel. So you can put in ITM Trading or my name, Lynette Zang. And we've also opened a new site called BGS, which is Beyond Gold and Silver, that actually talks about the rest of it, the food, the water, the energy, etc., so that we take a very holistic approach to positioning into metals and sustaining our standard of living. Because there's no doubt, there's not one day. I mean, we're at the end. There's virtually no purchasing power left officially in the currencies, none. And the tool that central bankers have, which are interest rates, they're trying to raise them and they're going to keep doing it because they're going to push us into this next crisis. But I really don't think any of this is a coincidence. I think they know that we're out of, they need some value in there they can take away. We're out of that. We have to go into a new system. We're at the end of this currency, this fiat money experiment. We're at the end.
I agree, which is very sad, but most importantly, you still have time. You still have time to protect yourself.
Mm-hmm.
And look, how many times can I thank Lynette? Australians love you. Australians love you, Lynette. They keep on saying to us, but when are you going to interview Lynette Zang again? Right? So we always have a wow of a time, and you're full of just powerful information, which is so much appreciated. So we thank you again for your support for this.
Thank you for having me. I appreciate that too.
Absolute pleasure. Just like to finish by making reference to Peter Daniels, his quote about, because he's always held gold, lots of it, but he said, I do not care what poorly executed economic decisions are being made in the world tonight, tomorrow, I'll still be able to party. And there's some pretty poor economic decisions being made very regularly at the moment. But in his case, and for a gold holder, you can live with that because you're on top of your game. Egon von Greyer's, of course. Brian and I were at a function going back Gold Symposium a couple of years ago, and the CEO for the Perth Mint was speaking at the time, and he completed the presentation. But at Q&A, he was asked the question, how much should we invest in precious metals? And he said, look, I'm a great believer in 5%, thereabouts. But he said, there are some people in the world that, he said, they talk 50%, 60%, but they come from another planet. Well, what happened then? The keynote speaker of the event, Egon von Greyers, came out on stage, and what did he say,
And
Brian?
he said, well, I'm Egon Greyers and I come from another planet.
And everyone loved it. It just, it was just a roar from the audience. It was just fantastic. The only person in the room who felt uncomfortable at the time would have been the Perth Mint CEO, and he's no longer
the CEO.
So, and I guess just completing, Jim Sinclair, of course, makes a strong reference to becoming your own central bank. And we've talked about that
Yes.
all through this presentation, and you could never be more correct. You want to be in the position they're in, where they hold the power. They have the influence. They are in control. And you want to be in exactly the same position. We must learn from the way central banks function. Lynette, thank you so much. Really appreciate your support again and again. And would also like to thank our viewing audience for continually supporting this channel. Take advantage of Lynette Zang's offer. Many of you guys are in the United States of America. Go to ITM Trading, connect with them. They believe in the same principles that we do. Look forward to catching up with you again, Lynette, in the not too distant future. Merry Christmas. Have a fantastic period over the Christmas break, and we'll talk soon. Bye.
Bye, Lynette.